Deloitte produced a government report on public sector integrity, but after publication, it turned out that the report included fabricated quotes, hallucinated references, all written by AI. AI hallucinated. Deloitte paid the price financially and reputationally. AI doesn't lower the bar for accountability, it raises it. No one's saying don't use AI. It is a game changer. If your name is on reports like that, nobody blames the algorithm, they blame the people. So you cannot outsource responsibility, not even to AI. So number one, audit your AI. Number two, verify everything. Number three, educate your team. There's a training element here, isn't there? So we don't ban AI. It is useful. It's a enabler, but you've got to guide it and you've got to train your staff on how to recognize when AI is guessing and when it's grounded in fact. I'm Rob Brown. We're delving into the dark side of AI today. What happens when artificial intelligence goes wrong? Hallucinations, controversies, that's what we're talking about today. AI is rewriting the rules of accounting, but it's also rewriting reports, spreadsheets, it's inventing sources, it's hallucinating facts. You've probably seen a few stories about this, and that's dangerous in the accounting profession. It's not funny, it's not clever, it's not smart, it's definitely not chargeable. And in the business of risk mitigation that accounting professionals are, you need to be on top of this. Welcome to Accounting Voices. I'm Rob Brown. We're delving into the dark side of AI today. The moments when technology goes rogue, that it has a mind of its own, credibility collapses, and accountants are left to clean up the mess. With all the very best intentions, AI doesn't make mistakes quietly, it makes them confidently. That's what you've got to remember. So we're going to look at some cautionary tales that every accounting leader should know and what it tells us about the fine line between innovation and irresponsibility, because it can go wrong. Here on the Accounting Voices show, we give you the trends, the info, the insights to keep you relevant, to keep you informed, and to give you a strong personal brand so that you lead from the front. This is not so much a newsy show. It's definitely not a technical show, and it's not a technological show. It's more on the softer side of you showing up in the right way and having authority and credibility and authenticity in what you're doing. So we take what's going on and give you the applications in your role to lead better and chart the course in these murky times. So we're going to look at some cautionary tales here, and I want to start with Deloitte. Now, obviously, we can pick on the big guys because they make a ton of money. And if you are in Deloitte, then you will know this story, but it made mainstream news. This was in Australia. Deloitte produced a government report on public sector integrity. So it's a very serious, high-profile document. But after publication, it turned out that the report included fabricated quotes, fake sources, hallucinated references, all written by AI. So it used Microsoft's Xero OpenAI service, which is built on ChatGPT 4, and the system invented citations that didn't exist, so it's giving false sources. And Deloitte has now issued a correction and refunded part of its $440,000 fee, and finally, publicly apologized. There was some pushback on this, but they have done. AI hallucinated. Deloitte paid the price financially and reputationally, but the accounting profession on a wider scope took a hit. And that's the problem, isn't it? That lies and bad news travels very, very fast. Politicians called it reckless, clients called it careless, the public called it unprofessional. And the lesson here is that AI doesn't lower the bar for accountability, it raises it. No one's saying don't use AI. It is a game changer. If your name is on reports like that, nobody blames the algorithm, they blame the people. So you cannot outsource responsibility, not even to AI, because it will make mistakes, just like humans. When AI creates fake news in the accounting world, it's something we all need to be aware of. Let's take another couple of the big four. KPMG PWC, a Senate inquiry, again, and this is in Australia, but a lot of countries are in play here, received submissions from academics who used Google's AI tool and Bard to help draft their reports. So when you're using these AI tools, they do invent entire scandals, fake stories, and accusing KPMG of wage theft and PWC of misconduct. So these stories hit the news. The headlines spread before anyone realized that these things were made up. So as KPMG PWC are scrambling to fight this news online that's damaging them reputationally, the CEO at KPMG had to step up publicly to defend 10,000 employees from reputational damage caused by a chatbot. So AI wasn't just hallucinating data, it made up scandals that were not true. So in these stories, KPMG PWC were innocent, but they were branded or tarnished, if you like, because these submissions were false. So these weren't rogue accountants all the time. Accountants don't seek to be malevolent, do they? They're not evil. All accountants are, they are good people. They want to do a job. They want to serve. Some of them under a lot of pressure. Obviously, when you get to the big four, they extort their pound of flesh. And long hours, we get that. There's big money, there's big responsibilities too. So accountants are well-meaning in all of this, and they're using AI to save time, to streamline things, to maybe even serve clients better. But AI doesn't know the truth. It knows patterns, it recognizes word patterns, word formations, it does some research, but it doesn't know the difference between evidence and confidence. And confidence without evidence is malpractice, isn't it? And that's where the real risk lies, because accountants are the source of truth. They are the trusted advisor. They are relied on to mitigate all risks. They are, as the guardians of data, they're in control of so much privacy, so much security, and there's a lot at stake. And a confident lie told by AI can fool anybody and can destroy credibility. Vendors also misfired. So there's a claim about perfect automation, or a myth, I should say, because it's not just the firms here, the tech vendors, the software specialists, they're learning hard lessons too, because AI is prevailing in their world. For instance, Xero launched its new AI assistant, Jax, J-A-X, a chatbot designed to help small businesses with invoices, expenses, bank reconciliation. And the early users reported that Jax was slow, unreliable, and often wrong. It froze mid-task. It produced incorrect invoice data. It got confused with basic commands. And AI might never sleep, but it can still have bad days. So Xero got a lot of bad press from this. And it's using AI, but it's working wrongly. And Xero is not alone on this. Intuit, Sage, and others are rushing with this. They're bringing AI co-pilots and all kinds of AI integration to data. A lot of software vendors, particularly some of the startups, they will claim AI integration. It's difficult for accountants what AI integration actually is, and you've got to push back on this, because it could mean a jackpot. It could mean a chatbot. It could mean some data scraping. It could mean a lot more. But all these vendors now are actually in play with AI. Some are brilliant, some are really, really good and well-intentioned and well-researched. The R&D is excellent. Others are half-baked. A lot are putting AI integrated on the box, as it were, but it's really still in beta, and every mistake becomes public. So there's a new gold rush in AI, but the new Wild West in AI is quality control, because the brutal truth is that firms and vendors are selling AI as a finished product, often when in reality it's still in the R&D phase, it's still experimental. So you as a client may be a guinea pig, you as an accounting firm using software may be a guinea pig. Don't be the test case that teaches somebody else a lesson at your expense. That's what I'm saying to you here. You've got to be so sharp and on this. Because, well, what do these mistakes really mean for you as leaders? These stories are not about failure necessarily. Yeah, failure is an element of it, but it's a wake-up call for us. Because every leader wants to be leader in accounting. And I've got to say to you, as wherever you are in the chain, in your firm, we're all influencers. Even the most introverted accounting professionals will influence thousands of people in their lifetime. You've got an audience, you've got people that pay attention to what you say. And so we've got to be asking, whether you're in audit, finance, assurance, advisory, accounting generally, bookkeeping, you've got to ask three questions. Three questions. Number one, where are we using AI without proper oversight, without proper review? Number two, who is accountable for the outputs from artificial intelligence in our firm? You might just be working on your own, in which case it's you. But you've got to see where the buck stops, where the accountability is. Number three, do our clients know when AI has touched their work. Do they want to know? Probably. Do you tell them? Maybe not. There was, for many years, an atmosphere of reticence when we were outsourcing. So accounting firms, it is much more respectable now and very much part of the playbook for all accounting firms to be outsourcing, offshoring, nearshoring, whatever you call it, because it's got huge respectability in the firm. But in the early days, accounting firms were not telling clients that they were outsourcing their work. So it goes back to the point, do you tell your clients that you're using AI in their work, their accounts, their preparation, even the advice that you're giving them? If you don't have an AI policy, you've probably already got an AI problem. Because AI, yes, it will make you faster, it will make you smarter, it will make you more efficient, but it can also make you more careless, more complacent. It tempts very smart people to take shortcuts. And it whispers to you, let the machines, let the robots handle it. And the danger of AI isn't the evil robots, it's actually lazy humans. We've got to control the beast. And when we delegate too much thinking to the algorithms, we lose what clients pay for and what is our competitive advantage as humans. It's the emotional side of it, the judgment, the context, the trust, the challenge. Clients buy confidence, that they're not buying code. They're not buying algorithms. They're not buying ChatGPT or Bard or Copilot or Perplexity or insert your own there. I'm not an advocate of anyone in particular. So as leaders in accounting firms, and we're all leading, we're all owning certain narratives, we're all putting our work up as exemplary. How do we use AI without losing control? I want to wrap up the show with this. So we always try and give you practical applications here, and I'm going to be staying with AI for quite a few weeks on this Accounting Voices show. So tip number one is to audit your AI. Know exactly where and how it's been used in your practice, your firm, your workflow. Who's using ChatGPT, Copilot, Xero, Jax? Who's using what and on what data? Visibility, transparency gives you an element of control. Number two, verify everything. So treat, almost as academics do, treat AI output like you would a junior staffer's first draft. It's helpful, but it's not verified. It's untrusted. So you've got to double check sources, figures, citations. I did my degree. I was a teacher. Did an education degree, and back in the days where you were on microfiches and looking in libraries and citing all your research, AI will do that for you now, but you've got to check the checking. So number one, audit your AI. Number two, verify everything. Number three, educate your team. There's a training element here, isn't there? So we don't ban our AI. It is useful. It's a enabler, like all technology really, but you've got to guide it and you've got to train your staff on how to recognize when AI is guessing and when it's grounded in fact. Number four, create transparency. How are you going to communicate to clients that if AI supports the work you're doing for them, how does that look and what element of it is? And does that reflect in any pricing changes? Honesty builds confidence, and accountants are in the business of relationships, aren't they? They are the guardians of trust. Transparency is not a weakness, it's insurance, it's credibility. And shouldn't we be communicating with our clients? Number five, last one, is to protect your reputation. In a world where technology moves faster than regulation, you can't wait for the regulation to catch up. So your credibility is your firewall, it's your transparency, it's your honesty, it's your checking. So your name as an individual, as a personal brand, and the brand name on the door is still a signature to the work. It's not the software. You are signing your name on anything you put out. So where does this leave us? AI is here to stay, but trust is still the human domain. You cannot implicitly rely on AI to be 100% correct. It can write a report, but only you can stand behind that report and put your name to it. You can't say AI wrote it and then put a disclaimer on it. You've got to own it. So firms that thrive are not going to be the ones who adopt AI the fastest. They're going to be the ones that use it the smartest way, wisely, balancing the innovation, the speed with integrity, with authenticity, with ownership. Technology moves fast, but reputation lasts forever and you can destroy it overnight. This is Accounting Voices. I'm Rob Brown. We're on YouTube. We run the Accounting Voices Collective, which if you're based in North America or are aimed there with your focus, these are speed networking sessions we run every couple of months. The next one's December the 5th as this goes out live. And if you want to join that, just go to Accounting Voices on LinkedIn and Accounting Voices on YouTube. We will see you there. And if this episode has made you think, please share it with a colleague. The show's growing really fast, particularly on YouTube. Who knew that YouTube as a video medium would be where most podcasts are now sourced and consumed? It's the way the world is going, but that's where we are. And we've got 6,000 subscribers on there. So do join us. Do join us on our Accounting Voices LinkedIn newsletter as well. So we appreciate you sharing and looking on YouTube, connecting with me on LinkedIn. If you want to have a conversation, joining our newsletter for updates on a couple of new shows that we're launching as well in the M&A private equity space, and we're doing a panel-based podcast on artificial intelligence. If you, your company, your outfit wants to sponsor this and reach accounting decision makers worldwide, there's an opportunity for that as well. But for now, until next time, remember, as we keep saying, stay relevant, stay informed. Changing is hard, but not changing is harder. Have a great day.